In this video, I want to talk about developing ourselves as traders, learning from losses, and using losses as lessons to build resilience, to become a better trader, and build upon those losses in order for us to have winning trades. I'm going to go over a losing trade that I took, and then I'm going to go over my thought process and why I responded to that losing trade, and how I made money off of that losing trade just by becoming resilient, focusing on my emotions, and not putting my head down after a loss. Something that I see a lot of traders resonate with, and I'm sure a lot of people are going to agree with what I'm saying in this video. And that's good because once you understand the concepts, I'm confident it's going to help you all become better and remove these bad negative habits that you shouldn't have in your trading. Before we get into the charts, I'm going to post a link in the description below to follow me on Instagram at InvestaTrade. This is my only account. I definitely recommend following me on here. I post daily trading recaps along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. The link will be in the description below. You're seriously missing out if you're not following it. But now let's get right into these psychology tips. First thing I want to start off with is let's act like three traders took the same exact trades and all three of them lose money on this setup. I want to go over the pre-market plan. I post these every single day in my Discord, setups I'm watching, levels I'm looking out for, and potential trading scenarios. So on the S&P 500, I'm going to maximize this so you can see the levels. We had demand at 3902, which is this green box, and 3892, which is the green line inside of that. I would like to gauge strength today, bullish scenarios, not by bounces off of demand, but by rallies to the upside. So I didn't want to gauge how the market was reacting on pullbacks because pullbacks have been shallow, pullbacks have been weak. Buyers really haven't been buying the dip so much back on September 7th. So I wanted to gauge the strength when I see that type of action, not by reversals, but more for continuation to the upside. Where we're going to find this out at is at 3934 and 3942 supply, which is this pink box right here. What we do here is important, and if we could get above this, we're going to see 3960, which is the yellow line, and then 3983, which is the supply zone above that. All I expect to be tough resistance until proven otherwise from buyers. We will gain these clues from intraday auction. Now, in the intraday commentary tab, this is where I update my thoughts throughout the day. I said I'm going to be looking for a scalp only for a pullback into 3918, 3913 to play long for a scalp inside of supply. As I was writing that, it looks like we were going to hit that prior to that. But essentially, the market opens up, and then we start pulling back here. Now, the first thing I want to explain is the first trader for this setup. Let's just say they take it, they follow it. The first trader loses. I took a losing trade on this. I'm going to show you where I entered. But let's just act like three different traders, all three different personalities, and three different types of emotions. The first trader loses, becomes discouraged, angry with the market, punches the monitor, screams out loud, cries, and gives up. I've seen it happen to people. It's a human emotion. No one wants to lose. No one likes losing. So a lot of people give up. They freak out. They shut the computer off. They cry. They have just an emotional breakdown because they took a losing trade and their hard-earned money that they put into the market is depleting and they're losing. So the trade that I took, that's the first trader, was I was watching a bounce off of 3918 to 3913, which is this area right here. So what I saw was the market came down into 3918, 3913, and I saw some heavy volume come into the market, as you can see over here. Some nice buying pressure came into the market. We didn't hit the level, we broke below it, by a point, never closed below it, but the market immediately came back up, and there was some strong buying activity in this area right here. And as the market was coming up around 3925, 24, I took the market long. I'll actually mark it with an oval in this area right here. Stop loss below 3915, 3914. I was anticipating a breakout above this level. The market was going to break the downtrend and continue up into the supply zone above. I like sometimes using supply zones as magnets to prices where liquidity sometimes will gravitate towards to facilitate the auction. So I'm in long right here. Then the market pulls back and we break below this area and I stop out of the trade. I lost. However, going back to trader number one, Trader number one cannot accept the loss. They become discouraged, they're angry at the market, they punch the monitor, they cry, and they give up on the day, closing out and just accepting being a loser, right? Or not accepting being a loser, because in the market you have to accept losing in order to win. Trader number one cannot accept being a loser. Trader number two, same scenario, same entry as I got in at, just he reacts with frustration, wants to make his money back, and trades more aggressively, and then he just loses much more money. How many times has that happened to you? Let me know down below. How many times have you entered a trade, you lost on it, and you had the mentality of, okay, I want to make this back so much, I'm going to go in with larger size because I want to make that money back, and that just backfires on you, and maybe what was a $200 loss now turns into a $1,000 loss because you let your emotions get involved and you let your greed to try to make the money back step in. So now let's just say same scenario. We see the market come back into this area. We take it long now again. After the first trade, which was a losing one, we take it again right here at the oval. We bounce off this level. Maybe we get long at this candle right here, speculating that we were going to break this downtrend line and target supply above. Maybe the first trade we traded with 5 contracts, 10 contracts, and now because we wanted to make the money back, now we're trading with 20 contracts or 30 contracts, right? Now we get in long, immediately the market starts reversing on us, we freak out, and now what was a smaller loss at that point is now a bigger loss because we wanted to make the money back. We acted upon emotions, and then the market eventually starts working out. That's trader number 2, right? Trader number 3. The third trader loses, steps back, reassesses the market and the strategy, figures out, okay, what did I do wrong? Did I do something wrong? Was there just the market, not agreeing with my analysis at that time? Did I mistime it? They reassess the error. They wait for a clear and better opportunity. Then they find that opportunity and they act upon it and make the lost money back and then some. This is what happened to me. I was trader number 1. I was trader number 2 when I first started out my first 2 years. It sucks, but you have to go through it to understand what not to do. So if you take a loss, don't be like trader number 1. Don't be like trader number 2, and be like trader number 3. I took this same exact setup at the same exact point. So what I saw here was the market had a very large flag, right? We were putting in lower lows, putting in lower highs. Volume was nice into the market. We actually broke this previous low, bounced off of this little area right here from this consolidation on the market open right here. Bounced off at 2 different times, holding VWAP. Market leading equities were strong. I saw the market come up. We had resistance at 3925. As soon as 3925 was coming into the market and I saw volume building right here on the break of this downtrend, I re-entered the market. I took a loss on the first setup, right? I'm not crying about it. I'm not saying, oh, I suck as a trader. I'm not freaking out. I'm not shutting down my monitors. I'm not frustrated. I take losing trades all the time. But what makes someone successful is how they bounce back from a losing trade and respond to it in the market. Then we started coming up. My plan was working out very well. We hit supply, sold 90% of my position here, had a couple of runners. We broke, retested this previous high, and then continued up, and I sold the rest inside of supply, leaving a ton of profit on the table. However, I followed my plan, and we haven't seen much long continuation at the time of this day in the market. And eventually, from the pre-market plan, all our levels hit. Going back to the plan, 3960 traded, and I said if we could get above 3960, it's going to bring 3983, which we hit 3983 going into the end of the day. So the main point with this is just do not put your head down after a loss. Many traders fail because they take negative events personally. If you take the market personally, it doesn't care about you. The market doesn't care about you. It doesn't care about your feelings. It really doesn't. You are one out of 10 million traders in the marketplace. The market does not care about you, especially as a retail trader trading with small size. So if you take negative events personally, you are basically taking yourself personally against yourself. The market doesn't care about you, doesn't care about your feelings. You need to become resilient in order to be successful. A good analogy I just thought of is think about the military, right? Why do the military members go through such extensive training? they treat them or they train them to become resilient. They go through boot camp. They go through all this hardcore training mentally and physically, which we should do the same with the market. They go through this training so they can become resilient. How do you expect to go in the middle of war or in the middle of the battlefield or somewhere where your life is on the line and expect to know what you're doing, become resilient if you've never experienced it or haven't trained yourself to experience these failures or these stresses enough to be able to emotionally respond to them in a positive way? It just will not happen. Now, I want to define resilient. Going on to a Google definition of it, let me actually zoom in here. Google defines being resilient as being able to withstand or recover quickly from difficult conditions. Synonyms: strong, tough, hardy, quick to recover, quick to bounce back. Those scream the personality traits that are needed to be successful in the market. Quick to bounce back, you got to be mentally sharp, tough, strong, hard. Also, number two, able to recoil or spring back into shape after bending, stretching, or being compressed. Elastic, flexible, right? Let's just say our account is down 2% or 5% on the day, and okay, we're out of shape, we're stretched, our account's bending, we're being compressed, it's getting smaller, but we're resilient enough to bring it back in shape, recoil, come back, be flexible, do what the market's telling us, and make back those losses if the market presents a high quality opportunity. Now, I want to make this very key. I actually didn't type this out here. Being resilient does not mean forcing setups to make it back. Being resilient means taking a losing trade, operating in stressful conditions. The market is very stressful. For me, to this day, I've sat with the best traders on Wall Street, and they are sitting at their desk very stressed. Now, how you perceive this stress is different from someone that's successful or unsuccessful, profitable and unprofitable. However, a resilient trader can operate in this stressful environment and still function enough to wait and strike on another opportunity which arises. This does not mean to take a setup because you want to be resilient if nothing is right in front of you. Taking a trade and being resilient does not mean forcing setups. It's the complete opposite. It's being patient enough and being able to function after a loss or a setback. It doesn't even have to be a loss. And this attributes to life in general, not even trading. That's why I love trading. It's very relatable and very combined and confluent with real life scenarios. You got to be able to function after high stressful opportunities. Some people just go lay down and cry about it. They put themselves in a ball and they want to just forget about their problems, thinking it's not going to exist. In the market, it doesn't work like that. If you forget about something, you don't do something to improve, you're never going to become better and you're never going to grow. With this being said, how we become resilient is this. Successful traders learn to build their resilience over time and they adapt to stresses that one might have been overwhelming at some other point. That loss that I took, and my trading over the years has completely transformed. I make more money by just increasing my size. I follow the same process. I don't change much up because I have something that works for me, and I'm one that doesn't fix something if it's not broken, and that's something that I think a lot of traders need to do. My process has been the same over the years, going back to even my earlier videos. Nothing has changed. With this being said, if I took the loss when I first started out, and like I said earlier, I was trader number 1 and 2 at some point. I got discouraged. I acted with frustration. I turned a small losing trade into a bigger one, trying to make it back. I've went through 1 and 2 before, right? However, becoming resilient means you could adapt to stresses that at one point might have been overwhelming. Meaning, if I didn't experience being trader number 1 and 2, and seeing how much I lost on this first setup right here, for some people it's a little money, for some people it's a lot of money, right? But if I was back in year 1 or year 2 and took this loss, I would not know how to respond to this because it would have been a lot of money compared to where I'm at right now. It's all about perspective. And then if I said, okay, I would have made the money back and then some and make so much more profit by taking the same exact setup just by me mistiming the market, it wouldn't have made sense to me when I first started out because I never experienced it and I never had that subconscious piece of information in my brain that I process. The brain's like a muscle, and we have to train it every single day. Like we go to the gym, we work out, our muscles get stronger. You might not see the results today, you might not see the results next week by going to the gym, but subconsciously it gets stronger and the muscle builds its strength, it becomes flexible, and it knows how to respond to certain situations that it never experienced before. You can't go into the gym and go expect to bench 300 pounds if you've never benched 100 pounds before. It just won't work out unless you could, you're really strong. But same thing, someone in the military is not going to go into the middle of battle not knowing how to shoot a gun. You got to learn how to do certain things first that one time may have been overwhelming in order to experience it and understand it. Pain plus reflection equals growth. If you don't have pain, you're not going to grow. If you don't reflect on that pain, you're not going to grow. If you have pain and you don't reflect upon it and you don't learn from that pain and those losses mentally, you're never going to grow as a trader. Believe me, if you take one thing out of this, it's that right there. Pain plus reflection equals growth. Screen time and experience builds adaptation. Adaptation to handle now familiar situations with resilience. Going back into the market, if I didn't have the experience and the screen time in my first 2, 3, 4 years, whatever the case may be, to understand the type of scenario like this, I wouldn't have been able to familiarize myself with resilience and trade this trade with a stress-free environment to make my money back if I never experienced the pain that I first went through mentally when I first started out. So screen time and experience is everything. I'll make a video on screen time and experience if you guys want it. Let's try to get this video to 1,506 likes. I'll make a video on screen time and experience, very in-depth one. But screen time and experience is everything. It builds adaptation, and adaptation now handles familiar situations with resilience. Let me ask you, how do I expect to build resilience and handle stressful experiences if we've never experienced them? How do you expect to handle losses well if you've never experienced taking losses? This is why I say you have to lose in order to win. And when people hear me say that, they say I'm crazy. But you have to lose in order to win. If I didn't lose when I first started out, I would not be a winner right now, plain and simple. How do you expect to be resilient and handle stressful experiences if you've never experienced them before? It's an unknown piece that has to become known for us to fully understand it. And that's every single thing in the market. You have to experience it to become better. So I'm going to leave you all off on that note. As I record this, I really think this might be one of my best psychology videos, tying it into the charts and just emotions overall. If it helped, let's try to get 1,506 likes. Comment if you have any questions and check out the links in the description below. I offer a very in-depth course that comes with access to the Discord. I just added a section on futures trading, and I plan to add more in-depth order flow analysis in the future, and prices will be increasing soon. But I'm ending it on that note. Peace out.